Most people believe that the money in their bank account is an asset. They are wrong. In the 2026 landscape, that balance is a liability held on someone else's ledger. We are entering the era of the liquidity lockdown. Institutional debt has reached the event horizon. When the legacy system hits a stress test, whether it's an energy shock or a geopolitical choke point, the first thing they do is limit the exit. We saw the tremors in 2008. We saw them again in 2023. Those were warnings. The main event is a compliance lockdown. This isn't about a bank running out of money. It's about the bank deciding that your transfer is high risk. It's about the 72-hour hold that becomes a 30-day freeze. While the masses panic and wait for a government bailout that will never reach their hands, the architect builds a private clearinghouse. To survive this, you must understand the 3 pillars of financial stagnancy. First, counterparty risk. You are only as solvent as the institution holding your keys. If they fail, you fail. Second, velocity control. Banks thrive on slow money. They profit by delaying your transactions and lending out your capital while you wait for a clearance. Third, the Oracle problem. If the bank's internal data flagged your industry as high risk, the truth of your business doesn't matter. The algorithm is the judge, and there is no appeal process for a frozen node. The architect doesn't fight the bank. The architect bypasses it entirely. If the logic of the liquidity lockdown is clear to you, hit the like button. On this channel, that isn't a vanity metric. It's a consensus mechanism. It tells the algorithm that this briefing is high-value infrastructure. Help us push this to the architects who need to see the bypass before the exit closes for good. We're deploying a Sovereign Liquidity Node, a system where you control the on-ramps, the storage, and the triggers. We're about to declassify the Sentinel Treasury Node. If you haven't yet, subscribe and toggle the notification bell. In the Agentic era, timing is the only edge we have. Subscribing ensures your personal node is synced with every briefing I drop. Get the lead time required to move before the masses realize the doors are locked. We start with the scarcity trigger. We don't wait for the news to tell us a bank is failing. By the time it's on the news, the liquidity is already gone. We script the data directly. You must build a monitor that tracks the credit default swap spreads of the top 5 global institutions. Credit default swaps are essentially insurance against a bank's failure. When those prices spike, the market knows something you don't. Your micro execution is simple. If a bank's CDS spread spikes by more than 15% in a single 24-hour window, your script triggers an automatic liquidity pull. This moves your operating capital from the legacy account into your private settlement layer before the bank has time to implement an emergency maintenance window. Next is the multi-jurisdictional bridge. You cannot be sovereign if you are trapped in a single currency or a single legal jurisdiction. We use Circle or Pax Gold as our settlement layer. This isn't about crypto trading. It's about using a 24/7 global ledger that doesn't close on weekends. You connect your business revenue to a Gnosis safe. This is a multi-signature ledger. It ensures that even if one of your devices is compromised, your clearinghouse remains locked. It requires 2 out of 3 keys to move any significant volume. You are the only one who holds those keys. Not a bank manager, not a compliance officer, just you. Then we implement the automated arbitrage. When the lockdown happens, the price of liquidity skyrockets. Those who are trapped will pay a premium for movable capital. You set up a flash loan node. By using protocols like Aave or Uniswap, you can lend your idle capital during periods of high volatility. While the legacy world is frozen, your automated node is earning between 12 and 18% APY by providing the very liquidity the system is trying to choke out. Look at the data from the 2023 Silicon Valley Bank collapse. Businesses with a standard treasury lost access to their payroll for 4 critical days. They were forced to take emergency high-interest loans just to keep their staff. In contrast, businesses operating an Agentic node moved 90% of their capital into on-chain treasuries within 12 minutes of the first institutional alert. The institutional latency is between 48 and 72 hours. The architect's latency is 14 seconds. The cost of this infrastructure is less than $50 a month in API fees. The cost of not having it is the total loss of your operational capability when the system decides to pivot. Solvency is a team sport. If you have a business partner or a fellow founder who is still operating on a legacy bank ledger, share this briefing. Sending this link is a network expansion. The more architects we have operating sovereign nodes, the more resilient our parallel economy becomes. Don't let your inner circle be the ones left in the lockdown while you are operating in the clear. This is the divide. The hustler worries about making money. The architect worries about keeping and moving money. The 2026 liquidity lockdown is a filter. It will wash away those who relied on the legacy system and reward those who built the bypass. You aren't just an entrepreneur. You are a private clearinghouse. You are the one who provides stability when the world's ledgers go dark. The era of the bank is ending. The era of the sovereign node is here. If you are building with us, drop Node Online in the comments. Like the briefing to seal the consensus, and I'll see you in the next declassification. Node deployed.